Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the complex world of corporate finance, and that right there might just be one of the most complex ones we have tackled in a while, so buckle up. Today we are diving deep into a report from T. Rowe Price Retirement Funds Incorporated. This is not your typical company report, like a regular business selling gadgets or services. This is a report about a fund, a big investment fund, and specifically the Retirement 2025 fund for the period ending the 30th of November 2025. Now, normally these reports can be a bit dry, but trust me, there are some juicy numbers and insights hidden in here. So if you want to understand where your money might be going or just how these massive investment operations work, you are in the right place. Oh, and before we get into the nitty gritty, if you love getting these kinds of straight, no-nonsense breakdowns from SEC filings, make sure you hit that subscribe button and the notification bell. We also have a fantastic community over on Discord, linked in the description below, where we break down these documents and more, so join us. So what exactly is this document, a Form N-CSR? This is like a super detailed report card for registered management investment companies, the big investment firms. It shows us exactly what investments these funds are holding, their financial performance, and a whole lot more. This report is all about the Retirement 2025 Fund and open-end management investment company. Think of it as a giant pool of money from many investors managed by T. Rowe Price, a company we all know in the investment world. The fund itself invests in a collection of other T. Rowe Price funds, so it is like a fund of funds. The idea is to grow your money over time with a balance of capital growth and income. And this report covers the 6 months leading up to November 2025. Let us talk about the costs first, because everyone wants to know what they are paying for. For a hypothetical $10,000 investment in the investor class of the Retirement 2025 fund, you would have paid around $28, which is about 0.53% of your investment. Now that might sound small, but over long periods, these fees can really add up. For the advisor class, that cost jumps up to $41 or 0.78%. And for the R class, it is even higher at $54 or 1.03%. The I class, however, has the lowest cost at just $19 or 0.37%. This tells us that different share classes have different fee structures, which is pretty common in the fund world. Now, for the big numbers, this fund is not small at all. The total net assets were a massive $18,194,774,000. That is over $18 billion. That is a staggering amount of money being managed. The number of portfolio holdings stands at 32, which means the fund invests in 32 different underlying T. Rowe Price funds to achieve its investment goals. The portfolio turnover rate was 7.0%. This basically means how often the fund buys and sells its holdings. A low turnover rate like this suggests a more buy and hold strategy rather than frequent trading, which can sometimes mean lower transaction costs and a more stable investment approach. So what is all this money invested in? Let us look at the asset allocation. Domestic equity funds make up the largest slice at 40.8%. This means a big chunk of the money is invested in stocks of companies based in the United States. Then we have domestic bond funds at 29.6%, so a significant portion is in US bonds. International equity funds are at 14.9% and international bond funds at 12.1%. This shows a good global diversification. They also hold 0.3% in US Treasury debt, which is considered very safe. Finally, 2.3% is in short-term and other investments. This overall blend of stocks and bonds, both domestic and international, is typical for a retirement fund aiming for growth with some stability. Now let us see what specific T. Rowe Price funds are holding the most. The biggest holding is the T. Rowe Price New Income Fund at 13.9%. This is followed by the T. Rowe Price Limited Duration Inflation Focused Bond Fund at 10.0%. Then we see the T. Rowe Price Value Fund at 7.8% and the T. Rowe Price Growth Stock Fund at 7.7%. It is interesting to see a mix of income-focused bond funds and growth and value stock funds. The top 10 holdings alone account for a significant portion of the fund's assets. This reflects T. Rowe Price's strategy of investing in its own range of specialized funds. Now let us look at the financial highlights for the different share classes. We already touched on the costs, but let us dig a bit deeper. For the investor class, the total return for the 6 months ending the 30th of November 2025 was 8.69%. This is a pretty solid return over just 6 months. For the advisor class, it was 8.60%. The R class saw a total return of 8.41%, and the I class, which as we saw is the cheapest, had the highest return at 8.81%. This difference in returns, while small for a 6-month period, can be significant over many years. The I-Class's higher return is likely due to its lower expense ratio, effectively allowing more of the investment gains to stay with the investor. Looking at the ratios to average net assets is insightful. For the investor class, gross expenses before payments by price associates were 0.53%, and net expenses after those payments stayed the same at 0.53%. This suggests that T. Rowe Price is covering some expenses, which is a common practice. Net investment income for the investor class was 2.03%, indicating the income generated by the fund's investments after expenses. The portfolio turnover rate for all classes is consistently 7.0% for this period. The net assets for the investor class at the end of the period were $6, $313 million or $6.3 billion. For the advisor class, it was $681 million. For the R class, $707 million. And for the I class, a massive $10, $494 million or over $10.4 billion. This clearly shows the I class is the dominant share class in terms of assets under management, which makes sense given its lower fees. Now let us look at the actual investments the fund is making. The portfolio of investments shows us the breakdown of what is inside this giant pool of money. We see bond funds making up 41.7%. Within this category, the T. Rowe Price New Income Fund is the largest holding, followed by the limited duration inflation-focused bond fund. Equity funds comprise 55.7% of the portfolio. Here, the Value Fund and Growth Stock Fund are among the top holdings. There is also a portion in other mutual funds and short-term investments, including the T. Rowe Price US Treasury Money Fund. This diversification across asset classes and within various T. Rowe Price funds is a core strategy. Interestingly, the fund also uses some derivative instruments, specifically futures contracts, to manage its investments. For example, they have short positions in MSI ETH index contracts, Russell 2000 E-mini index contracts, and SIM P500 E-mini index contracts. These are used to manage risks related to market movements. The notional amount for these contracts is quite large, but the actual value and unrealized loss on these positions was relatively small as of the 30th of November 2025. This indicates they are using derivatives as a tool for hedging and managing specific market exposures rather than for speculative purposes. The report details the fund's investments in what it calls affiliated companies. Since the fund invests in other T. Rowe Price funds, these are considered affiliated. The report shows the realized gains, losses, and investment income generated from these internal investments. For instance, the Equity Index 500 fund generated a net realized gain of over $105 million and investment income of over $6 million. This section really highlights the inter-P. Rowe P. Rice ecosystem, where money flows between different funds managed by the same company. On the asset and liability side, we see the total net assets of the fund are $18,194,774,000. The investments in securities are valued at $18,202,562,000. On the liability side, we have accounts like payable for shares redeemed and management fees. The net asset value per share is broken down by class, as we discussed earlier, with the I class having the highest NAV per S share at $18.65. The statement of operations shows us where the money came from and where it went. Total income for the 6 months ended the 30th of November 2025 was $237,004,000. Expenses were $43,016,000. This results in a net investment income of $193,988,000. Then there is the realized and unrealized gain or loss section, which is a big driver of performance. Net realized gain was $401,698,000, and the change in net unrealized gain or loss was a huge $942,071,000. This positive unrealized gain shows that the value of the fund's holdings increased during this period. The total increase in net assets from operations was a substantial $1,537,757,000. The statement of changes in net assets shows how the fund's net assets grew or shrank over time. For the 6 months ending the 30th of November 2025, there was a decrease in net assets from capital share transactions of $1,700,241,000. This accounts for shares being bought and sold. Despite this decrease in shares outstanding for some classes, the fund's overall net assets saw a decrease of $162,484,000, which is relatively small compared to the total assets. The notes to financial statements are where the real details are. They explain the fund's structure, operations, and accounting policies. It clarifies that the fund is an open-end management investment company that invests in other T. Rowe Price funds, and that it has 4 different share classes, each with its own fee structure and distribution policies. It also discusses how the fund values its investments at fair value using a hierarchy that categorizes inputs from observable market prices to unobservable ones. The notes also explain the use of derivatives and the related risks. The information on derivative instruments is particularly important. It explains how the fund uses futures contracts to manage cash flows, adjust allocation, and rebalance its portfolio. It is good to see they are not using these for pure speculation, but for managing risks. The report details the counterparty risk, which is minimal because these are exchange traded and centrally cleared. This means a clearinghouse is involved acting as a guarantor, which reduces the risk of one party defaulting. This note confirms the fund's strategy of investing in other T. Rowe Price funds. It states that purchases and sales of these underlying funds aggregated to over $1.2 billion for purchases and over $2.5 billion for sales in the 6 months. This high volume of transactions shows active management within the T. Rowe Price family of funds. For tax purposes, the fund intends to remain a regulated investment company by distributing all its taxable income and gains to shareholders. This generally means the fund itself does not pay federal income taxes directly. The cost of investments for tax purposes was over $14.6 billion, and there was a substantial net unrealized gain of nearly $3.6 billion. This suggests a strong performance during the period. This section is crucial for understanding the inner workings. It explains that T. Rowe Price Associates Inc. manages the fund and also all the underlying funds. This is a related party transaction where money is essentially moving within the same corporate family. The fund pays an all-inclusive fee for investment management and operating expenses, which varies by share class. The effective fee rate for the investor advisor and R classes was 0.53%, while for the I class it was 0.37%. This reiterates why the I class is cheaper and often preferred by larger institutional investors. It also notes that T. Rowe Price Group Inc. or its subsidiaries owned a small percentage of the I-Class shares. This fund is considered one reportable segment. This means that for the purposes of internal reporting and resource allocation by the chief operating decision maker, T. Rowe Price views the entire Retirement 2025 fund as a single operating unit. Performance is assessed on the whole against its benchmark and investment objective. Finally, the general risks section. It acknowledges that unpredictable events like environmental disasters, political instability, and public health crises can significantly impact the economy and markets. This is standard boilerplate, but it is important to remember that even well-managed funds are subject to these broader market forces. So what is my take on this report? It paints a picture of a massive established fund managed by a giant in the industry. The strategy of investing in a diversified portfolio of T. Rowe Price's own funds appears to be working with strong returns for the period. The difference in expense ratios across share classes is a key takeaway and highlights the importance of choosing the right share class based on your investment amount and needs. The fund is using derivatives to manage risk, which is a sophisticated approach, and the related party transactions are typical for such a structure and do not necessarily signal a problem, but it is good to be aware of them. The net asset value and investment performance numbers are impressive, but remember, past performance is not a guarantee of future results. The biggest strength here is the diversification and the management expertise of T. Rowe Price. The main risk is always market volatility, and the fees, while reasonable for the I class, can still eat into returns for other classes over the long term. Alright, that is our deep dive into the T. Rowe Price Retirement 2025 Fund Report. What are your thoughts on these kinds of fund-to-fund strategies and the fee structures? Let me know in the comments below if this breakdown was helpful. Give this video a thumbs up and subscribe for more corporate financial analysis. And remember to join our Discord community, linked in the description for even more insights and discussions. Thanks for watching Corporate Decoder, and we will see you in the next video.